History rarely announces itself with headlines. It moves quietly through balance sheets and bond markets. In 2023, China sold nearly $688 billion in U.S. government debt. Not suddenly, not emotionally, and most importantly, not for profit. Many of those bonds were sold at a loss. That single fact changes everything, because nations don't accept losses unless staying is more dangerous than leaving. To understand why China walked away, we need to understand what U.S. debt really represents. For decades, U.S. Treasury bonds were considered the safest asset on Earth. They weren't just investments, they were trust, stability, and access to the global system. China accumulated these bonds by exporting goods and recycling dollars back into U.S. debt. At its peak, China held over $1.3 trillion in treasuries. But after 2018, something changed. Trade tensions increased, sanctions became normal, and financial assets became political tools. Then came 2022, when Western governments froze Russia's foreign reserves. A message was sent to every major creditor. Reserves were no longer neutral, they were conditional. For China, this created a new kind of risk. Holding U.S. debt meant exposure to decisions made in Washington, not Beijing. At the same time, U.S. interest rates rose at the fastest pace in decades. Bond prices fell, losses mounted. China now faced a choice: hold the bonds and accept long-term exposure, or sell, take losses, and regain control. China chose control. The sell-off wasn't a weapon, it was a withdrawal. And the money didn't disappear. China increased gold reserves, expanded non-dollar trade settlements, and redirected capital into assets it could fully govern. The United States didn't collapse. Other buyers filled the gap. But the cost of borrowing rose, quietly, persistently. This wasn't the end of the dollar. It was something slower and more important, a reduction of dependence. History isn't written in dramatic moments. It's written in decisions like this, where a nation accepts losses today to avoid vulnerability tomorrow. History isn't boring when you follow the money.